Good afternoon, everyone, and welcome to Stock Market Today. It's Alissa Coram here today, Thursday, March 13th, and more red on the screens today as tariff woes continue. And joining me now to break down today's action is my colleague, Ken Shreve. Ken, what do you have for us today?
Yeah, lots of uncertainty in the stock market, Ali. More selling in the indexes today. Let's stay in the insurance sector. Take a look at Allstate, ALL, in the Biotech group, Vertex Pharmaceuticals, VRTX, and also in healthcare, drug distributor McKesson, MCK.
All right, sounds good. But first, let's take a look at the major indexes today, even though we don't want to because they don't look too pretty. But the Nasdaq down another 2% today, Ken. The S&P 500 down 1.4%. Same for the Dow. The Russell 2000 down about 1.5%, headed into the final stretch of the day there. So the Russell undercutting lows. The Dow continuing to make lows. The S&P 500 undercutting recent lows. The Nasdaq here barely not undercutting the lows, but that doesn't mean it's looking too great here for the Nasdaq either.
Still a rough day in terms of the Nasdaq's percentage decline. It does look like volume really dried up yesterday on the upside when we got that first day of a rally attempt. It was actually pretty light. Mentioned on IBD Live earlier this morning when the market first opened, or so during the first hour of trading. Even when the selling seemed to be pretty intense, there wasn't a lot of volume in the market. It did hold for a good part of the day. You can see right now volume pretty close to what we saw yesterday, which was light. I suppose the one saving grace for the Nasdaq today is that it held literally 1 point above Tuesday's low. So technically, the rally is still intact here. Day two of a rally attempt did not look good at all, but because we held above Tuesday's low, we'll continue counting the rally attempt here and see where we go.
Yeah, buy a thread there. All right, let's take a look at the S&P 500. Looks like we did close above that 5500 level, but not by much.
That's a round number that held today, 5,500. But again, that low from Tuesday, not yesterday's low, but the low from Tuesday
Mhm.
was undercut. So just in terms of the S&P 500 rally attempt, we're back in a position of just looking for the first day of a rally attempt. It can be up 0.1%, it could be up 1%, it could be up 2%. Just looking for an
Mhm.
up day at this point, and then some follow through soon after that.
Yep. Okay. Let's see. Comments on blue chips, Ken.
Still looking for the first day of a rally attempt here. Blue chips often regarded or can be regarded as a safe haven, but seeing a lot of blue chips now, and we've said it many times in the past, but a weak market tends to bring everything down with it. So even some of these liquid, large cap blue chip names still under a lot of selling pressure here.
Hmm. And the Russell 2000 small caps continuing to look pretty bleak. And we do now have a close below that 2000 level. That goes back a pretty long ways there, Ken.
This is another index that's under a lot of distribution and just highlights the difficulty of this market. So, when we're looking for signs of strength in the indexes, we'll keep our attention focused on the Nasdaq Composite and the S&P 500. Pay attention to what rally attempts look like, and then just see if we can get some follow through, some sign of strength, some hint that new money is coming in from the sidelines. We're certainly not seeing it in the Dow and the Russell 2000. Really not seeing it much in the Nasdaq and the S&P 500 either.
Okay, Ken. Let's briefly talk about the 10-year Treasury yield. We had CPI yesterday, PPI data today, and both reports, on the face of it, you would think, we would get positive market reactions. Again, a lot of cross currents out there, and the market primarily focused right now on tariffs. What do you make of what we're seeing with the Treasury yields right now?
Well, you can see that 10-year yield trying to firm up and hold support at the 200-day moving price average here. Yields strengthened a bit. The wholesale inflation data, as measured by the producer price index earlier today, was very similar to what we saw in consumer prices yesterday. Softening prices. That means that inflation is slowly headed in the right direction. Still a little bit elevated, but the market responded okay to pretty good inflation data yesterday. Did not react to pretty good news from the producer price index, which again was softer than expected. We're just in a market that's under distribution, and bond yields have firmed up, but they did definitely reverse lower today.
Yeah. All right, next on our list, we want to take a look at GDX. The gold miners continue to be an area of strength and a notable move here for the gold miner ETF. GDX up 3% today, now breaking out of a cup with handle base. But this is something that we've been tracking, that relative strength line over the last couple of weeks. And again, now today a breakout.
Yeah, we were watching GDX set up here, and we were watching a lot of gold miners and gold producers, silver stocks just outperforming in this market. So it definitely has, typically gold is an inflation hedge. At least it has been in the past. So no surprise to see money flowing into gold and other precious metals stocks here. So this is a really clean breakout for GDX today. Typically, when the market's in a correction, heavy volume breakouts are going to have a hard time making headway. But because this is gold related, it held gains well. There was a good increase in volume today. So really, just a picture perfect breakout, and what a technical breakout should look like. Still in buy range from that 42.66 entry, well within the 5% buy zone. So as we mentioned on yesterday's show, it makes sense, to have some exposure to gold at this point, and I think today was an opportunity for some.
Right. And I think it'll be interesting to see how this breakout ultimately plays out. One would think if the market uncertainty continues, this it has a pretty good chance with gold being that flight to safety area. My concern is, though, if you look at the prior history of the stock last summer, when it got support off of the 50-day line, it did pull back a number of times there. So again, it'll be interesting to see, will this breakout work and will this have room to run? It very well could.
Yeah, I think as long as these the tariff headlines that are really seemingly on a daily basis coming out of the White House, if the tariff uncertainty at least starts to come into better focus, I'm not sure that has a good chance of happening. But if the market can start feeling a little better about
Mhm.
what these tariffs are going to mean for economic growth in the U.S., that's what the market's trying to figure out here. You have some economists saying that if there is a negative impact on the economy, it will, and Trump is saying the same thing, that it will be minor. Treasury Secretary Scott Bessent, said the same thing. If there is any, economic disruptions, it should be short-lived. But there are other people that, disagree with that. Other economists that disagree and think that tariffs are just going to keep inflation stubbornly high as costs are passed on to the consumer. So you can see both arguments, but as long as uncertainty is out there, it's going to be a very choppy market environment, and wouldn't be surprised to see gold continue to work here for a little while longer.
All right. Well, we're continuing to see defensive stocks like insurance names in focus, with Allstate up 1.9% on the day and an RS line blue dot as it works on the right side of this base, underscoring its price performance versus the S&P 500 as of late. Price outperformance versus the S&P 500.
Yeah, and again, this is something that I talked about a little bit on IBD Live this morning. But it's interesting. You've had a lot of insurance stocks breaking out to new highs. A lot, showing great relative strength. Allstate, even with a relative strength line in new high ground, hasn't broken out yet. So this is still, I mean, you can call that 199.03. It was probably an early buy signal there, but it's been pulling back. Even yesterday, there was a good shakeout in Allstate. It closed up near its high for the day on Wednesday, so there was definitely some support in there. Low volume rally today, but this looks like it's kind of sitting around a new entry. So, there's always a bull market somewhere, and certainly the insurance stocks have turned into a nice flight to safety here. Fairly stable earnings growth for many of these names. So this is stock that's been outperforming the S&P 500, even though it fully hasn't broken out yet. As long as gold is working here, insurance stocks could have more left as well.
And just a reminder for the audience, even if there are stocks or ETFs setting up and breaking out, doesn't necessarily mean you have to trade. IBD's methodology says that when a market is in a correction, and even our team updating as of a couple of weeks ago at this point, our recommended exposure down to 0 to 20%, it's a good time to be cautious. If you do want to take on trades, manage that risk with position size, with a stop loss, but at any rate, it's if you are just on the sidelines, it's good to know what is showing the strength out there so you can get a better feel for the market underneath the hood.
Yeah, I mentioned also that we were fairly very lightly invested for the leaderboard model portfolio, but earlier this week we gave AON a shot, knowing that new buys are risky in this type of environment, and it's just kind of floating right around where we entered it, maybe just 2 or 3 points below our entry. We knew the risk we were taking on, but again, the invested percentage at the time was 16%. We went up to about 21% after this ad. So nothing too aggressive. If we go to the daily chart here for
Sure.
um, this Ireland-based company, just kind of still holding near its 21-day moving average, and just kind of still flirting with that 395 uh, left side high buy point
Mhm.
there. So like to see it firm up here at the 21-day line. If it doesn't work, it doesn't
Yeah.
work. We'll keep our losses small, but
No.
felt like insurance exposure was definitely worth a shot here.
Yeah. All right. Well, healthcare, another area that some flee to, I guess you could say, when market conditions are tough. Here's a stock in the medical biomed biotech group, Vertex Pharmaceuticals, up 1.5% on the day. It's shown a lot of relative strength, Ken, in recent weeks. So, at the very least, another good one for the radar for investors because this can be more of a growthy area as well when the market is rocking and rolling. So potentially a good one for the watch list as we wait for the market to turn.
Yeah, kind of a whippy stock lately, but it's been a stock that has been in our growth screens literally for many years because it just has a good track record of earnings, a very dynamic pipeline. When the stock first started rallying, if you go to the daily chart when it really broke out over or moved back above the 200-day moving average, gapped up above the 450 level. I think that's when their non-opioid pain reliever was approved by the FDA. So it has a new growth driver here with this new non-opioid drug. Uh, Approval was expected, so it wasn't a big surprise. But it's continuing to show relative strength here. You can see it popped over the 500 level pretty strong early in the session, but sellers knocked the stock off a little bit off highs, still in that 5% buy zone from a 491.81 entry. So still, we talk a lot about gold and insurance, but a lot of biotech stocks acting well. Besides Vertex. So this is a good. Has been a long time solid name in the group.
Yeah. Let's go to McKesson. This is ticker MCK, also in the medical sector, but this one in the wholesale drug supplier group, even higher ranked than the previous group in the 60s out of 197. This group ranked number 22 out of the 197 groups that we track. So, an interesting name here as it sits in a buy zone near highs.
Yeah, and a stock that has long-term leader qualities. You can see that earnings stability rank. We don't talk about that a lot at 7. The lower the number, the better here. So stocks with an earnings stability rank of 1 have a very, very stable, consistent track record of earnings. 99 is the worst. So McKesson, good long-term track record of earnings here. If you go back to the daily chart, drug distributors typically. Very stable earnings growth that don't really swing due to, economic conditions, recessions, or not. So this is a very defensive area of the market, known for consistent growth. And this chart actually looks a lot like the insurers that have been seeing money flow here. Breakout from a consolidation pullback, orderly pullback in light volume to the 10-day back and buy range from that 632 pivot. So you can see where the money is flowing in this market. And again, if you want some exposure to typically defensive names, I think the three names we talked about today are ideas. But like the way McKesson looks here, very high-ranking industry group as well. So it tells you there's some other strong performers in this group as well.
Absolutely. All right, Ken. Thanks so much as always. We appreciate it.
Let's get a good up session here sometime soon. This selling is killing me.
Yeah, I know. I know. We'd love for things to turn around. So we'll see what we get. But at the very least, for those out there who have been following IBD's methodology, hopefully as of a couple of weeks ago, at least you started reducing exposure and are hopefully sitting happily on the sidelines and just playing here and there while managing risk if you feel the temptation to do so. But we'll continue to be on follow through day watch. Thanks for tuning in, everyone. That is it from us for today, but we will be back with more tomorrow morning on IBD Live, investors.com/IBD Live for all the details on our daily morning live stream starting 10 minutes before the opening bell. And tomorrow is Friday, so we have a special guest on IBD Live. We will be joined by Kathy Donnelly, returning to the show, co author of The Life Cycle Trade. Really interested in hearing her thoughts. She has some huge gains in big winners over multiple time year horizons. So, loving her perspective, and we'll love to get her perspective on how she's handling the pullback and managing those long-term winning positions. So that's tomorrow. We will see you then, everyone. And then we'll also see you right back here tomorrow after the close.